Although the Bank of Canada has cut rates 4 times in a row, we are seeing some news that it might not be the rate cuts that are actually getting the increased market value today. So we're going to cover an article here. Canadian home sales have reached the highest level since April 2022. It's been 2 years, but we're seeing things take a little bit of an uptick here. In today's video, I got an article from stories.com that we're going to break down. We're going to see what the root cause, at least according to the author of the article here, is for the uptick. Is it the Bank of Canada reducing rates, or is it something different? All right, so let's dive in. Although the Bank of Canada has had 4 rate cuts since June of this year, may not be exactly the reason why home prices actually shot up in October 2024. So after Toronto and Vancouver real estate boards posted their striking year-over-year increase in home sales for October, it was up 44%, but this is just a reminder, up 44% of numbers that aren't great. It's not really something to really brag home about, but 30% respectively in Vancouver. It appears that they are not alone, as Canadian real estate reported on Friday. Nationwide sales in October were actually the highest they've been since April 2022, as the article is titled here. So all in all, sales rose 7.7% month over month, and they grew a substantial 30% from October 2023. So in the last 12 months, they're 30% up, not all on seasonally adjusted basis. In comparison, sales only rose 1.9% in the month over month in September and August, representing a potential break in this holding pattern. So August, September, the jump was very minuscule, a couple percent, if that, but finally we're seeing a bigger jump here in the 7.7% jump month over month. So as you I keep having a cough attack here. So as you can see from the chart, 2007 all the way to 2024, this is your 10-year monthly average. You can see back in 2007, it was quite high. It's done its ups, it's done its downs. We really dropped off in 2020, and then we shot back up all the way to almost 65,000 in that 2021-2022 timeframe. But since 2022, you can see we've really been under that 10-year monthly average for 2 years now. So we are finally getting back to that month average that we haven't seen in a couple years. So although we saw that 50 basis point reduction in October, which was amazing for a lot of us variable rate holders, the Canadian Real Estate Association is not saying that that is why sales have risen. They're attributing the growth to a jump in listings. This is very interesting. So take a look here. The jump in home sales last month was definitely an October surprise. I may tend to agree here. Although with the big interest rate cut of 50 basis points announced during last month, the increase was more likely related to a surge in new listings that were seen in September. This is something that Sean Cathcart of Canadian Real Estate Association is saying here. Although the jump last month was a surprise to a lot of people, including myself, we saw a good month for the first time in a long time here. The increase is more likely related to the surge in new listings that populated in September. And this is coming from the senior economist Sean Cathcart at Canadian Real Estate Association. He's saying there probably won't be another rush of inventory hitting the market like this until spring of 2025. I tend to agree. We are in that winter cycle. So after November, things tend to drop down a little bit as people prepare for their Christmas, their family time, and then we see that thing start to tick back up towards the mid half of January and get back to its typical cycle, hopefully in that March-April time frame. So maybe this is something we can expect going forward for April or March of 2025, is more inventory and more picking up in terms of the actual market itself. So after surging by 4.8% in September to 185,000 new listings in the most recent month, the listings fell 3.5% month over month. So in October, 174,000. So we lost about 11,000 active listings, representing a 11% increase from last year. This dip was led by a drop in supply across the GTA, but thanks to September growth, new supply remains at some of the highest levels since 2022, according to the Canadian Real Estate Association. As a result here, we saw some tightening in some of the sales to new listings ratio. In October, that went up to 58% from the 52% in September. With sales rising and listings falling, balanced market is generally between 45 to 65%. Long-term average 55%. So we're kind of finding ourselves right in that more balanced market right now. We can expect 3.7 months of inventory on a national basis, down from 4.1 months at the end of September. So we're actually getting to pretty close to a balanced market. Generally, I consider 3 months a balanced market. So we're maybe just a little bit higher, but we're getting very, very close, which is nice to see for a lot of our clients, a lot of our buyers and sellers. It's nice to have a balanced market. Nobody wants a high sellers or a heavy buyers market. It's just not really conducive to making things happen in the market. It makes people sit on their hands a lot more. As for the home prices, the National Composite MLS Price Index here is a little bit down, 0.1% from September. It's keeping in line with significant home prices that we've seen across the year. On a non-seasonally adjusted basis, the HPI is actually down 2.7% from October 2023, but on the annual basis, it's up 6%, landing us with an average national home price of $696,000 in October, which is up from $669,000 in September. So this is the chart here for the residential average price in Canada. Obviously, it's going to be skewed. The prices across Canada are all over the place. But as you can see here, very similar to the last chart we looked at, big spike here, 2021, 2022, but we're kind of getting back on the more stable trajectory here. As you look at this chart, if you take out those outlier years, we would be kind of where we should be. But it's looking like a fall off a cliff because we had those 2 real high peak years. Now, statement here coming from Canadian Real Estate Association Chair, October's strong sales numbers across Canada suggest that the buyers have been in the market since rate cuts started, apparently, and they were just waiting for the right house to hit the market before they took action. So this ton of inventory that we saw hit the market in September was their reason to pull the trigger and why we saw an uptick in price. I'm not sure if I actually agree with this. We've got a lot of clients that are out there, and I wouldn't say they were in the market during the summertime. That first couple rate reductions did not do it for them. I'm not speaking for the whole market, of course. This may be a correct statement. I'd love to know your thoughts in the comment section down below. Did those couple rate decreases early on, those 2 quarter-point reductions, move the needle for you at all? Or were you just waiting for the rates to drop more instead of the actual inventory to hit the market? So this article is very interesting. They're stating that the mass amount of inventory that hit the market is why the prices actually shot up in October. Very well could be the truth, or is it a combination of both that and the interest rates actually starting to get closer in terms of the variable and the fixed rate together here? If the variable rate gets a little bit more similar or on par with that fixed rate, that's when things are really going to start to change. Right now, if you go into the bank and you're trying to get a new mortgage, they're likely just going to qualify you on a fixed rate because you might not even qualify for a variable, and you might not want to pay the extra point plus what it's going to cost you right now to get the variable. If the Bank of Canada in December drops this another 50 basis points, we're going to be pretty close to on par. And if we're on par, it might make more sense for you to consider going with that variable rate, knowing that it might drop a little bit more in the near future, and it might help people qualify for a little bit more if that variable rate does go below the fixed. Fixed has been fairly stable for the last few months here, so we'll have to see what happens with the bond market. This has been an interesting article. Let me know what you think in the comment section down below. Is the market peaking? Are you going to wait till spring to actually hop into the market yourself? Let's talk in the comment section down below, or text me at the number on screen, and I'm happy to have a one-on-one conversation with you. Now, if you're ready to start looking at houses right now, you can just click that first link in the description box down below. We can have a one-on-one consultation and figure out what you are looking for in today's market and make sure that you get yourself a fantastic deal. Thank you so much for watching this video. I will see you in the next one. Bye for now.